All right, guys, back to work this afternoon. Hope you guys had a fantastic weekend. Hope you got some rest. We have a very big final full week of the month of May. Got a holiday weekend coming up this weekend. A lot of pressure to make some money this week. And I'll tell you, we have a lot of great trades we're tracking for a very important Tuesday trading session. As always, I'm going to cover all my favorite trades in tonight's video that you get a game plan to make some money on Tuesday. Before we jump in, though, and get the party going tonight, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoy this stuff, do me a favor, as always, hit that like button. Give me a shout out in the comments section below. Thank you so much for tuning in, supporting the channel. Hope you had a good weekend. It's back to work, though. Where are the best trades setting up here for Tuesday? I'll tell you, we have a lot to talk about tonight on a very important video. Lots of ranges. They're still battling back and forth on the whole debt ceiling drama negotiation right now. Lot of ranges. Range on the S&P, range on the Nasdaq, range on the crude oil. Boy, we have had a fantastic last few weeks in our trade room trading range-bound markets. Range-bound markets act like magnets, right? Ranges act like magnets. And so when I think about a trading range, here's the key. Combination setups. From what it looks like right now, until we get this debt ceiling deal, signed, sealed, delivered here later on this week, range-bound markets. Tonight we'll talk about why I think the easiest money tomorrow, maybe the biggest money tomorrow as well, be made on combination setups, buying low, selling high. We're going to go into a lot more detail about that here on the video. Before we jump in, though, and talk about these combination setups, which you guys are going to love these, let's make sure we all get on the same page for tomorrow, because there really is a couple things that you want to be aware of. Now, keep in mind, we have a holiday weekend coming up, right? Which means there is a sense of urgency in the air this week to get that debt ceiling negotiation done. And for all of us traders out there, right, we know that Friday is probably going to be a half day. It's a full session in the futures markets, but next Monday's a holiday, right? So we definitely have there's pressure on the next couple days here for traders to get some money out of these markets, some beer money, right ahead of the kind of the summertime celebration this weekend. That is something we'll talk about more as we go deeper into the week this week. The big stuff we're going to be aware of for tomorrow is, first of all, that PMI number combined with the new home sales number at 10 o'clock Eastern time. Remember, we always kind of pay attention whenever we have news at 10 a.m. Eastern time. So the PMI number is more important than the new home sales number, but that combined together, that time of day tomorrow could be a very big catalyst for us tomorrow in our trade room. So definitely would be keeping your eyes on price action around that time tomorrow. And, again, we continue to keep getting more updates here out of the debt ceiling negotiations. As of the end of the week, last week, it sounded like things had fallen apart. We just recently heard from President Biden saying they're going to get something done. It sounds very constructive. So we'll see. You have to think right now, though, these markets are they're lingering. They're waiting on any new update right now, and that is a big, big question mark, a big variable as we go into tomorrow and really the rest of the week here. So we get a bunch of ranges on the chart until we hear more about the debt ceiling debate. We continue here to kind of play it, day by day right now. So big news tomorrow, 9:45, 10 o'clock. We got more news coming in on Wednesday, Thursday, and arguably the biggest news of the week, that personal income number on Friday. Oh, we're going to talk a lot more about that later on in the week, right? But for tomorrow, though, 9:45, 10 o'clock, be aware of that we know about those. And, of course, we'll see if we can get something solid here out of that debt ceiling debate. All right, back to our charts, though, because after all, right, the money is made on the charts. And if you like making money, I would definitely make sure you watch the entire video here tonight, because every trade I talk about in the video, we're going to go S&P, Nasdaq, crude oil. Every trade we talk about can be applied to different markets here tonight, right? So don't just click off after we're finished up with your favorite chart. Let's go S&P first, Nasdaq second. We'll wrap things up here tonight on the crude oil. Now, as always, these are tick charts. You can find all the time frames in the upper left-hand corner. This is the 21 EMA, the exponential moving average. Be aware of that on the chart. And as always, in the description, I'm going to add some higher time frames, some 4-hour charts, some 60-minute charts. You can find some of those bigger picture charts. I like to use the 60-minute and the 4-hour to help me find the best trades each day. So if you want to see more of what I'm looking at, grab those links linked up in the description of the video. I'll put all the important links we talk about tonight down in the description as well there. So be aware where you can find more information. Now, there are some great trades setting up right now on the S&P. There are three key components right now on really the S&P and the Nasdaq that are kind of tipping us off to where the best entries and exit targets will be for tomorrow. First things first here, overall bull direction, right? Overall bull bias. We had a very strong bullish run going into Thursday, into Friday last week. Anytime we see a strong move in one direction, we expect a pullback to attract buyers in and a retest of the high. So what that tells us is the buyers are ultimately hunting for, and again, this is also the Nasdaq as well, they're hunting for a retest of that high on the S&P, similar situation on the Nasdaq. Now, the second component we have to be aware of is that, and you'll see more of this in the description on the 4-hour and the 60-minute charts, but we are running into some significant resistance up overhead. I'm keeping it pretty simple on this chart right now, but there is a ton of resistance on the higher time frame right above that high. So the idea that buyers want to retest this high, this is a very difficult area to be a buyer, right? So keep that in mind, right? We really got to be careful buying high here. Now, third thing are these ranges. There's multiple ranges here right now. There was a bear range that developed on Friday afternoon into pretty much, right, kind of a neutral range, maybe a little bit of a bullish move there into a trading range. This area is a trading range. Ranges act like magnets. Okay, this is the most important variable that really it's the most important part of this equation, because if we understand that we're bullish overall, right, we know the buyers are trying to retest that high, but we also understand there's a lot of resistance up overhead, and the last place I want to be buying until we can get a breakout of this range, probably going to come on the back of the debt ceiling updates later this week. But until we see a breakout, it's almost impossible to justify buying up here. It might be better off, yes, to short this thing back down in. Because why? Well, there's a range waiting below us. So when you understand these three components, you begin to see that it's not difficult to find good trades. My favorite trades to be a buyer tomorrow are off the lows down here, right? This really solves everybody's problem, right? Because now, if I can buy off this low, I'm buying going with the overall direction. That's always more desirable, right? Go with the overall 60-minute direction. Also, too, the range is a magnet, and we're way away from overhead resistance. So if there is a trading god looking down on us watching my videos here right now, I'm half kidding, of course, right? If there is, though, that's where we want to get it here for tomorrow. I'm going to talk about, there are 3 different ways you can make money by buying that dip. I'm going to talk about that more here in a moment. Not just as simple as buying low. So we'll cover that in a second. Now, as we go higher, I still think there's ways to short off the high here. I mean, all the trades I was looking for this morning in the morning trade room were all shorts off the high, right? So I'm not afraid of selling off the high right now, and we'll definitely talk about some combination setups coming in off the high here as well. So let's break this down, right? My favorite trade is a run going lower. Later on in the video, we'll talk about the move going higher here. We're going to cover both of these bases here today. Now, I talked about combination trades. What did I mean by a combination trade? Well, in my free trading course, you guys have probably heard me talk about something called a failure into pullback combination. If you're taking my free trading class right now, you've probably heard me say a failure into pullback combo, right? It's again, if you're taking the free class right now, right, these are failures and these are pullbacks, right? So in a nutshell, this is the basic idea of the combination setup coming off the low. Now, let's go into more detail about this because it's not as simple as just as what I'm drawing right here. It is pretty simple, but not that simple. So if we do end up rolling lower, keep an eye out for these triangles down here, right around these areas, right? I want to get down in this area. Now, when we get down in these support levels below trading range, this is going to feel very bearish, right? Because it is. This is what you call rotation off the high. We're coming off the high of that trading range, and in this case, we'll rotate all the way down. So what you want to do is rather than simply buying the low like this, because it can be difficult to tell how far it will go, right? Sometimes it bounces hard, sometimes it keeps on going, right? So it's difficult to pick those bottoms. The way that I'll look to do it tomorrow is rather than picking the bottoms, let's get some sellers to come in and try a couple times. I'd like to use a slight variation of that failure setup I described earlier for what we call a two-try failure. Really get the bears roped in here. Again, a lot of momentum now as we come down off that high. Then once those bears are in, then we get such an easier job now. We can use their stops to fuel that turnaround, right? Does that make sense? Now, that's the failure pattern like you guys are learning in the free trading course. Now, the next follow-up, right? The follow-up is the pullback combination. Now, there's a lot of ways we can do this. It could be as simple as a pop-up, a pullback, and that first test of that moving average. This would be what we call a failure into pullback combo, right? Now, remember, like I talk about in the free trading course, this entry has some very specific rules to it, right? Higher high in price, slope moving average, the proper signal candle. You can learn more about that in the free trading course. And last but not least, don't forget, sometimes these will really pop and run. And if they do, look for the best entry right below a prior swing, right? We call these traps, right? So again, I say failure into pullback combination, but in all reality, it could be a two-try failure into a beautiful, my personal favorite is the trap entry coming off of that low. And again, you guys are learning this stuff in the free trading course, right? Same stuff you guys are learning in that video series, which reminds me, you guys are always asking. I know that most of you guys have taken that free video series. You're learning these entry tactics, but if you're one of the few folks who haven't taken that free video class yet, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades are going to be each day. And I'll teach you 4 of my favorite entry patterns to help kickstart you making money, like failures, like pullbacks, and trap setups. You guys will learn all the rules for that in that free video series. If you're tired of missing the best trades each day, if you're taking too many losses, definitely grab that link that popped up there. It is perfect for someone trying to make the jump into full-time trading. So that is one of my favorite trades right off of that low, is that combination, right? Trade that turn going back up into that trading range. Again, ranges act like magnets. Overall bull market, I would love to get us taking out some of these lows, right? And then popping back up again. Now, here's the challenge, right? Here's the challenge. As we go higher here, if we go higher here, could I short this, right? Could I short off the high? Could I trade a breakout? Now, this is where the S&P and Nasdaq are quite different. Okay, the S&P has a ton of resistance up overhead, so it doesn't seem as likely. Now, again, this could easily change if we get some positive updates regarding the debt ceiling drama at some point tonight or tomorrow morning, right? This could easily change. But look at the Nasdaq, right? And you'll see why pretty quickly here. Look at the Nasdaq. The Nasdaq, very similar to the S&P, but the one thing you'll notice right away is the Nasdaq has a little bit of resistance, but then we have this kind of wide open space, right, until we reach that 4-hour number up at that 058. And again, you guys can see the bigger picture stuff linked up in the description here below. So there are 3 main components on the Nasdaq, right? One We are hella, as they say in California, right? Hella bullish right now on the Nasdaq, right? Strong run up. I mean, you don't need me to tell you this, right? We know the buyers, right, are trying to retest that high. That's very, very similar to the S&P, right? Strong move up, overall bull bias right now. I would like to be a buyer a little bit more than be a seller. Right now, again today though, right, all we found were shorts off the high this morning in our trading this morning, right? So it's not the only way to trade it, but that tells you right away, right? We are looking for for longs here, ideally. The second piece of this puzzle is this overhead resistance, right? I mean, we have that big level right there. Now, again, this is one very big difference between the Nasdaq and the S&P, right? The S&P has just this wall of resistance up overhead. So not as likely to get that easy breakout. Okay. Third piece, of course, is the range. Okay, this is a very clear bullish market into a trading range right now. Whenever we see a clearly bullish move into a trading range, there are really two giveaway trades we look for. One, just as we talked about on the S&P, is to break below the range, right? Use something like a failure pattern, right? Trap the bears in and then trade that rotation. Think about that failure into pullback, that failure into trap setup. And keep in mind, guys, it could be here, it could be here, it could anywhere really down here, right? But we're still trying to get back up to retest that high here right now. So just look at the S&P, right? This is the most desirable trade, right? By a large margin, right? Because you're bullish overall. I would much rather buy low than have to buy high, right? So that is a very, very desirable trade here. The next one, of course, right, is the breakout. Okay, this is the one that has a little bit of proof to show us, right? Now, we know we want to buy below the range. That's kind of the easy part. The hard part is the breakout going higher. Okay, in a situation like this, we have to get what's called proof, right? You're always hearing me say in my trade room, make them prove it to us, right? Show me some proof. Show me you can actually do this, right? Because a lot of times, especially when you've got these overhead areas of resistance, especially on the S&P chart, a lot of times they'll try their best, but they won't make it very far. It'll get dragged back down here, and that can oftentimes lead to a very big reversal on the opposite side, because the amount that we go above the range can oftentimes be projected going below the range. So I want to talk about this short. I definitely want to talk about this short because, that might be, and again, I think a combination trade is possible right there, but that could easily be one of the biggest trades of the day tomorrow, right? Kind of a knee-jerk, head fake out breakout off the high there. And of course, we will talk about here in a moment, we'll talk about some breakouts going higher and what we would need to see some proof of that move. All right, so let's first talk about the short off the high. Okay, you guys have a pretty good game plan as we go lower. You know the general idea, and we'll do it together tomorrow morning, obviously, in our trade room. As we go higher here, what direction is momentum? It's bullish, right? So if I want to be a seller here right now, I have to what? I don't have momentum on my side. I'm always kind of reminding you guys, you want to be asking yourself, how is my location and how is my momentum? So in this context, I would love to short this high, right? I'd love to short this thing, right? But it's a great location, right? Great location for a short. I got trend line resistance, overhead high resistance, range below me. Great spot for a short, but momentum is the problem. Right? We're so bullish overall and we're bullish in the short term. So in order for me to pick a top on this market, I'm not going to simply blindly sell into it. What I'd rather do is see what the buyers do on the first pullback. Now on that first pullback, this is where the buyers will come in and they'll jump, right? And give us that proof that we need of a breakout. Or we'll see the opposite of that, right? We'll see the buyers begin to struggle. And as they struggle, this is where we have the opportunity now to short this thing back down again, because Remember, we don't have very good momentum on our side. We're going to need to use their stops, right? Need to use those stops as fuel, as we always joke around, right? Those stops as fuel. We have to use them. Obviously, kidding here, right? But use those stops as fuel, right, to run this thing back down again. I'm not a big fan of picking tops, right? Especially when I'm trying to go against that direction, right? But if I can get up into these areas of resistance, if I can see these buyers coming in and trying a couple times on the pullback, I then know exactly where their pain is, and I can look for signals. You'll learn more about signals in the free trading course. I can look for that signal, right, for that short going back down again. Okay. Now keep in mind, this again, like I said earlier, these have a tendency to really snap and run the opposite direction. The amount we go above the range can be used below the range as an objective. Okay, at this point now, think about triangle, right? Think about swing lows. Think about this whole area now becomes the objective, right? As the market rotates off the high. If we can get this now, this is where that combination trade may come in handy tomorrow. Again, it's a bull trap, right? It's a buyer failure off the high. We're selling into stops. And then watch what I do here. I can draw a trend line off the lows. I can bring it up around the high, and I can look for whichever entry pattern I get, right? Maybe it's a bull trap, an actual trap setup. Maybe it's a buyer failure pattern, right? Maybe it's a pullback setup, right, off of it. Again, we'll know more about this tomorrow once we actually start getting this stuff happening on the charts. But again, any of the entry patterns you guys are learning in that free trading course. And again, this is that combination, right? That failure into that pullback combination off the high. There may be some other variations of that, right? And we'll go over that tomorrow morning in the trade once we see what's happening. But that's the general idea, right? That's the general idea. Now, last but not least here, how do we cover breakouts? Okay, we talked about the proof that we need. I almost said fuel back there for a moment. We talked about the proof that we need. There are, for the most part, there are kind of three basic scenarios I look for when it comes to a range breakout. You ready? First one is the simple one. It's the pop and grind, right? These are very common. We may see the market pop up. We may begin to grind higher, right? Grind higher, grind. See how it says that, right? It kind of pops up and begins to separate off the moving average, and we grind higher, right? We call these pop and grinds. These are really, really easy, right? The follow through is the proof. And what you do is you draw a trend line off the highs, right? Off those highs like this. You bring it down to that low, right? Find the channel. And then what I do is I look left and I find prior swings that line up right around the low of that channel. All right. And then, of course, as always, get below prior swings because that's where traps live. Get below the moving average, right? That's where failure patterns live. Failures into pullbacks into strength, right? You guys are learning this in the free trading course, right? So trap setup, failure setup, pullback setup, strength setup as we go. And again, where do we think they're trying to go to, right? If they get a breakout like that, they're trying to get to that 14,058. It's almost a guarantee, right? Now, that's the first one. Second one, 1, 2, 3. Okay. We call these 1, 2, 3 breakouts, right? Or 1, 2, 3 moves. You'll hear me talk a lot about these 1, 2, 3 moves in my trade room tomorrow morning. What do they look like? First, pop up, right? Take out that high. Now, show me the proof. We pull back to the moving average, right? The buyers don't struggle. No, they don't, right? They jump off that moving average and they accelerate. This is where the strength of that jump is very, very important. Okay? It does not matter how strong that first leg is. Okay? We may end up running up, okay, pulling back and struggling and go back into that trading range. So promise me you're not going to get fooled by that first leg. Okay, that's kind of rule numero uno when it comes to breakouts. Don't let that first leg fool you. Okay, it's the second leg. The second leg is the leg that gives us proof. If they hold it and we begin to jump, now we've got a breakout. Okay, now very easy. Don't chase it going higher. Right, that's rule number 2. Don't chase it. Find that trend line off the high. See what I'm doing here? bring it down to that low. You got it, right? You smelling this stuff now? Find those swings. Now remember, I don't care what entry pattern I get off this low. It could be a trap setup. Those are my favorite. It could be a failure, right? As the bears come in, try to short this back down again. They get trapped below the moving average. Failure, we're buying the stops in that situation. Failure, pull back, strength move as we go. Now, one thing to keep in mind about breakouts, all right, is oftentimes the first leg, okay, is equal to the third leg, or the third leg equals the first leg. Okay, so once we get the breakout, then we go, okay, that's your first leg, measure that, and then once we see how deep that pullback is, right? Once we get the pullback, then we know how big the first leg is, and that will help us time the perfect exit, right, as we go higher. Okay, again, we have a good idea of where the market wants to go, but oftentimes we'll see these 1, 2, 3, right? Remember, that's the proof off that moving average. Then we go out, find that channel, right? Grab that pullback. And again, I'm keeping it simple obviously right now, right? Grab the entry off the low. And again, it's this leg right there, that leg right there. That's where I put my final target, right? And again, you'll learn more about trade management in the free trading course. All right, guys, that's the second one. The final one is kind of a breakout pullback. So sometimes what happens is sometimes the markets will jump, right, and break out. And it's like, okay, that's obviously a breakout. But what happens, though, is when the markets go really strong like this, right, all of a sudden people don't want to buy high, right? They don't want to buy too high. And so what happens oftentimes is, and again, this would probably be happening because of some development off of the the debt ceiling, right? So we rip higher, right? We rip higher. Now think about this area, right? That was resistance. Now it becomes an area of support, right? So now that level becomes support. If we get a big jump going higher, this is oftentimes too high to buy. And so markets will oftentimes really pull back quite significantly. Remember, we're an overall bull market, right? Overall bull market. If we see a strong punch higher, right? And I get it. I just said don't let the first leg fool you. But if that first leg is just huge, right? We're obviously a breakout in that situation. And I'll provide more details on this right tomorrow, right? But again, if we see it just rip, right? And run higher, the news headlines will say the deal is done, right? We're good to go, right? Whatever it is, right? If that happens, now we think, okay, don't buy too high. What will oftentimes happen is we'll begin to pump and dump back down again. This is where you want to start thinking about, where did we just come from, right? If we're lucky, we'll find a channel off the high, right, off the low, and find some, larger channel there. But the bottom line is, most of the time, these will go right back around those prior highs. The bears will come in. They'll think it's a reversal and try to sell it short. It probably isn't, right? Again, overall bull market. We haven't reached that 14,058 yet. Let's trap those bears in and use that same combination I just talked about, right? That failure, that pullback. And where do you think they want to go? They want to go back to retest the high, right? So again, this is like a breakout pullback, right? Breakout pullbacks are pretty common when that breakout is just ripping, right? When it's really, really racing and going higher there, because again, nobody wants to buy that high. So price will naturally come back down once the buyers dry up, once that short squeeze dries up, and that's usually where the easiest money is made. Trapping those bears in who are foolishly trying to sell this thing in a bull market, using their stops as fuel, and then potentially grabbing that pullback or that trap setup like I described earlier ahead of that retest of that high. All right, guys, so keep your eyes on that, those three different kind of variations of those breakouts. And again, hopefully we'll get this thing to tumble and we can get something off the low, but we'll keep an eye out for all of these scenarios. Remember, I'm not a big fan of predicting. When you predict stuff, you really only give yourself a few different ways to make money. When you game plan, when you visualize, right? When you go through some scenarios like we're doing right now, you put yourself in a position to capitalize on anything the market throws at you. All right, now wrapping things up here on the crude oil. The most important thing right now on crude oil is you have to go take a look at that 60-minute chart linked up in the description of the video right now, because you will quickly see see that we are basically consolidating right around this $72 a barrel area, right? We had that big run up, that range, but for some reason they're not retesting the high. This just smells like one big trading range that is maybe more slowly being developed around this $72, a barrel area right there. Now, of course, the jury is still out on this, right? The jury is still out. We haven't quite nailed that down yet, but that is definitely what it feels like. It feels like right now, right? So if you think about that big range, right? Think about that big triangle consolidation range on the 60-minute. If we know that ranges act like magnets, it's pretty easy at this point, right? So now, right, as we go higher, good place to be a buyer? No, right? A horrible spot to be a buyer. What do we do above the highs here? We trade the rotation, right? We fade the breakouts. We use those combination setups I mentioned earlier, right? As we go higher, right? I would love to rope in some of these buyers, right? Let those buyers try a couple times. Use their stops as fuel, if I can say so, on oil, right? For a failure into pullback combo. Back down again, right? Failure pattern first, and it could be a bull trap, it could be a buy, or could be a buyer failure, could be a pullback combo, right? Again, don't take this so literally. The idea, though, is get up into resistance, trap the buyers in, use their stops as fuel, and then whichever entry pattern we get on that first pullback, right? Again, it could be any of them, right? Could be a failure, a trap setup, right? Or a bearish pullback setup. Usually it's a trap, right? A bull trap, right? Off that high. Or we go lower, right? We take out some of these lows down here. There's a lot of support down here below this range. We take out some of these lows. Same thing, right? We rope in some of these bears, using their stops as fuel, trading that combination setup back and forth as we go. The key right now, this is nothing new. It's been like this, for the most part for the past few weeks here, besides those big strong trends we saw, Wednesday, Thursday last week. We are buying low, we are selling high, we are using those failure into pullback combinations you guys are learning in the free trading course, and we've had a fantastic last few weeks in our trade room, simply fading breakouts, right? And again, eventually we'll probably get a breakout, right? Eventually we will, but it sounds like right now we're waiting on updates regarding that debt ceiling. All right, guys, so buy low, sell high, right? Use those combinations, and tomorrow should be another great day tomorrow in our morning trade room. Now, don't forget, like I mentioned before, we get together every morning at 8 o'clock Eastern time. I can't think of any better way to learn this and come trade this and succeed than to do it with me every morning in our trade room. I'll put the trade room membership information. I'll put all the free trading course links. I'll put everything in the description of the video here tonight. If you need any help getting access to the trade room membership or the free trading course, don't be afraid to call the office. The easiest way to get our attention, the easiest way to get help is to call or use live chat. We're always here to help out if you need us along the way. All right, guys, hope you enjoyed the video tonight. Great job today in the morning trade room. More coming tomorrow. Hopefully I'll see you soon in the morning room with all the advanced members. In the meantime, have a great rest of your evening. We'll see you guys, if not tomorrow morning, same time, same place tomorrow. Will we have a deal coming this week? No. Here's the bigger question. Will the Lakers pull their you-know-what out of their you-know-where and get a win tonight to stay alive in the playoffs? I'm not going to hold my breath. I'm not going to hold my breath. Anyways, have a great evening. Thanks for watching. I will see you guys tomorrow morning in the trade room. If not, tomorrow night, same time, same place. We'll do it again. My name is Joseph. Be well. Be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye-bye for now.